First up, can you give us an indication of how the pandemic and the restrictions and some of these supply chain dislocations have affected your business?
Good morning. Starting back in March, when US and Europe started going into lockdown, we forecasted the rest of the year from April to December to be down about 50%. And this was back in March's forecast. And today in June, we've seen those numbers, realistic numbers. So what we had to do is we really had to look at our whole manufacturing footprint and see whether we have excess capacity, which obviously we do. And we have to make some long-term decisions to close our more expensive factories permanently in the hope that when we do recover, that we will move to cheaper locations in the future. On top of that, we decided to go into PPEs,
right.
Personal protective equipment, like masks. And you know, so far
talk to me
we're
about some of these
producing
longer-term business decisions that you'll have to make, because I know that you have manufacturing in China, in Hong Kong, also Ethiopia, and I believe in Vietnam and Thailand as well. So do you see a diversion away from Chinese factories, for example? Where would the store closures be based on cost and on risk, I guess?
We actually made a decision 5 years ago to reduce our exposure in China because of the rising costs. So we actually don't have a big exposure in China. As you mentioned, we're in Vietnam, which is now our largest base, and we started in Ethiopia 3 years ago. And I think that trend to continue to move to lower cost manufacturing countries will continue. And I think this has accelerated that by making people like us make some long-term decisions now that we need to reduce the really expensive locations now rather than waiting for a few more years, because the COVID has really forced us to make some tough decisions given the significant downturn that we're seeing.
So in terms of just annual capacity here, 55 million garments, that's the top end of your capacity. How much would you say are you using right now?
In June, I would say we're probably using about 30%. It's been a big drop. We expect a recovery in Q3 and Q4. But so it's a significant drop, but we've managed to replace making garments by making face masks, for example. So we've got orders already confirmed of 50 million masks total, and hopefully that will continue to grow.
In terms of demand then for, I guess, things other than masks, you know, the stuff that you guys usually churn out as well, as a reflection of where demand is coming back, where are you seeing orders picking up and where are you seeing orders not picking up?
I think even though we're first week of June and we've read that a lot of stores are slowly opening up, the demand has still been very slow. For the first 2 weeks in a lot of retailers in the US, the sales has been maybe 10 or 20% of previous same time last year. So it's been very slow still in US and Europe, where we supply most of our garments to.
Roger, what are you hearing from your retail partners? Because, of course, it's been well documented the number of retail bankruptcies we've seen in the US in particular. Are there partners that you've dealt with in the past that are not likely to survive this?
I think definitely. If you go back to March when this whole thing started for us, you know, customers were saying, "Oh, we'll be fine. We'll be down 15%," and we're very optimistic. I think customers in general were trying to tell the suppliers that everything will be fine. But we did our own planning, and as I mentioned, we plan to be down 50%, which is what's happening now. And I think customers who did not really plan for the worst case are facing significant financial difficulties because they didn't make the cuts necessary back in March. On top of that, we've always had, you know, a lot of brands have had too much retail footprint, and that's a lot of overhead. And during this time period when you're not opening retail, it's a significant cost burden on you. So we've seen some customers go into Chapter 11, and we expect to see more in the coming months that will have to enter this.
So about 70% of your business goes to the US. You've talked about the pivot to producing protective equipment given this crisis, but obviously that's going to be a shorter term thing. So what kind of a pivot would you make in terms of, you know, new markets and new products?
We believe that the personal protective equipment business, even though it's a short-term spike, could be a long-term business, not a huge business, but a continuous business moving forward. But back to your question about on the garment side, we still think that the markets we're in will continue to rebound. Unfortunately, due to any crisis, there's always going to be consolidation in the industry where small and medium players won't be able to survive this crisis, especially when customers are not paying. Quite a few of them are not paying at this time because they don't have the income to pay. And so a lot of small manufacturers will disappear, and I think supply will consolidate with people who will survive. And fortunately, I think we'll be one of those that will survive through this.
And I guess on that point, Roger, let me just ask you then, and I need to ask you this question, obviously, given that you've just mentioned you're only operating at 30%, cash flow, I would imagine, is an issue for you because cash flow is an issue for many of your customers. Your company is okay, right?
Yes, our company is private, and we've had a very frugal financial plan for many, many years. So we have definitely a strong enough balance sheet to weather through this. We've done worst case planning that if our business remains at 40% of previous orders, 60% of previous years for the next 3 years, we will still be fine. We've done sufficient planning to make sure that we're at the right cost base that we can survive even at such a huge reduction in volume moving forward.